Hey guys, and welcome to the Working Money channel. So there are a few things I want to talk about today, guys. Cryptos have been taking a dive. Let's take a look at this. Let's refresh the window, and still taking a dive. CoinMarketCap shows all the coins here, and as we can see, guys, everything is in the red, double-digit losses for all these altcoins, Bitcoin as well. And it's a little disheartening, right? We're coming into autumn, and we were hoping for big things for crypto, for it to pick right back up. But it hasn't, and we're a little concerned, right? We're seeing an XRP price of sub 30 cents, Ethereum 226, Bitcoin back down to 6,400. But guys, I know what you're probably thinking that I'm going to say, yeah, but this is a great buying opportunity. Well, it is a great buying opportunity, so let's get that out of the way. Let's think about the news that's going on and how Goldman Sachs, I know the Modern Investor did a video about this this morning, and this article's out there. But it's basically Goldman Sachs putting the brakes on the trading desk, the crypto trading desk. So they're no longer going to do that, or rather they're putting it on the back burner. But guys, I've come across this article here. BTC and crypto volatility is why we won't see a Bitcoin ETF anytime soon. And so yeah, we got to think about the Bitcoin volatility. We saw lots of gains in the last market, and that's great because the gains were huge. But just as huge were the losses, right? So even though we see huge gains, this is Bitcoin, guys, on a daily, even though we see huge gains in crypto, and this is why everybody was getting excited, we are also seeing losses that are equally as large. And guys, this is Bitcoin on the daily. Look at those last 2 days. Oh, geez, wow. Retracing right back into the support level here. But guys, going back to this article, do we really need Wall Street? I don't think we do, and I don't actually think it's a good idea. Not that we don't even need it, we do not want Wall Street to get involved in our crypto game. So right down here, guys, it's saying the stark reality. In reality, the reality is that the digital asset of Bitcoin that is meant to back an ETF has just fallen by 12.52% in the last 24 hours. The last few hours would look like Armageddon if it were to happen on a traditional exchange on Wall Street. And this is true, guys. If something were to happen and there was a 12.52% drop in the stock market, on Wall Street, in any kind of product that they deal with, we would be hearing it on the news. We would be hearing it from all the news outlets. Sky is falling. Business news would be going crazy. And for Bitcoin and cryptocurrency, we're not seeing that. And it's because this isn't mainstream yet. As much as we think that crypto is mainstream in our little world, and I've started to believe crypto is pretty mainstream in my world. I mean, the people now that I associate with are all very crypto-centric people. And so I feel like, well, how could anybody not know about cryptocurrencies? And how could anybody not be investing in this? Like, that is just insane. But lots of people, like I talk to my traditional stock trading pals, I suppose you'd call them, and they do not want to get into crypto, or they know a little bit about it and they're kind of interested and they may get into crypto. But I feel like I have learned so much about crypto in such a short amount of time, and I'm taking advantage of these opportunities. The more traditional investors, this will be a big thing for them. So the chances of the SEC approving such an investment option are slim, given their mission statement to protect investors. So having this large volatility for the everyday person, like we see this kind of thing and we're just like, okay, whatever. It's crypto, of course it's volatile, but realistically, in traditional trading, this is a big deal. So, but does crypto really need an ETF? From a philosophical point of view, fueled by Satoshi Nakamoto mindset, we do not need a Bitcoin ETF for the crypto markets to be great. We simply need to let the sands of time dictate crypto adoption to a level where the value of our crypto assets will not be affected by news such as Goldman Sachs dropping plans for a crypto trading desk. I couldn't agree more with this sentiment, guys. I wholeheartedly agree. I don't think Wall Street is good for crypto or good for making money. The reason why I say that is, there's a few reasons, but here's one of the reasons. And guys, this is the Bitcoin price action video, right? By Bitcoin Salvador. I use this a lot in my videos, and it just shows you the Bitcoin price action over time. And the point for showing you this video again and again and again and again is that it is very predictable how the ebbs and flows of Bitcoin work. And that is because humans are predictable. All charts is human psychology in action. How humans feel when they want to buy and how humans feel when they want to sell. And we can see at what prices they are doing this. So guys, this was the first Bitcoin pop in 2011. We see it pop to $32, comes right back down, bases, And then I'll just fast forward a little bit here, just kind of go through it a little quicker, right? And then we see another huge peak, right? And look at that, dwarfing this one, making this one look like nothing. And then comes right back down. Another peak, dwarfing this peak, making this look like nothing. Then it comes right back down. And then this lull was a little longer, as you can see. But ultimately, what happens? 2016, 2017, retracing to all-time highs, and then it was about 1,300 a Bitcoin at that point. And then here we go. Here is the latest run up, and this run up started pretty much, you know, the basing point was around 2015, and then Bitcoin just increased in value from there, going all the way up to the 20,000 mark, and then coming right back down again to where we are today, which is here, guys, right here. But my point being is that the trends are very predictable, and if we have Wall Street in there, if we have those guys playing their games in there, it won't be as predictable because they'll have the reins of the game and they will be calling the shots. So if we can assume, you know, if we can look at this Bitcoin price action, and we know psychology of people, we know traders, these are not sophisticated traders. These are people that may not have much experience. They're interested in Bitcoin. They might be techie people, but ultimately they're buying and selling Bitcoin based on price action. If we can predict price action, this is the best way to be able to trade. Once Wall Street guys get their dirty claws into this game, that's it. I don't think we're going to be able to see that kind of predictability anymore. And guys, here's another article that talks about this. I found this on Brave New Coin, and it's talking about bursting of baby boomer bubble will be a boon for millennials. Well, if that's not a tongue twister, I don't know what is. And guys, it says down here, since the 1980s, the boomers and their wealth managers have bought every significant dip in the stock market, providing a floor for the next rally to quickly rebound. Unlike the GFC and dot-com crash in 2001, after the next crash, there won't be the army of bidders to lift the market to new highs, and the downturn will be far longer, as the millennial generations have little loyalty to the market that have offered them little value in their lifetimes. Basically, this article, I know I kind of just jumped right in, but ultimately it's talking about how millennials are now becoming high income earners. They're becoming a large part of the segment of society that is now earning income while their baby boomer parents are now retiring. And in the past, baby boomers trusted vehicles like the stock market to build wealth. And so after stock market crashes, basically what it's saying is baby boomers would just pour money in, the market would just shoot right back up again, right? But now they're saying that millennials have no faith in the stock market. They do have faith in cryptocurrency. Let me just read a little bit more. On the other hand, the crypto markets were created out of the GFC's ruins by an open source generation that has already caught the imaginations of young innovators, investors, entrepreneurs, and millennial Wall Street traders who are leaving prestigious firms to pursue careers in crypto. According to research by Blockchain Capital, 27% of millennials think that Bitcoin is more trustworthy than big banks, a 9-year history versus a 400-year history. So guys, people trust cryptos. Millennials, people my age and younger, trust cryptocurrencies. They believe that this will give them a bright future. However, if Wall Street puts their claws into crypto, this could have a detrimental effect on the market as we know it. Last part of this video, I want to still continue to talk about XRP and how it's still going to thrive because, you know, we're still getting positive news. You know, despite this, right? Despite seeing this red negativity, double-digit losses for a lot of coins, we are still seeing positive news come out for some cryptos, including Ripple. So, you know, Ripple reveals it has now signed more than 100 production contracts, 100 plus production contracts. You can see the names in the back of this little board here behind Chris Larson as he gives a talk. And you know, there's more news. The TransferGo opens payment corridors to India using Ripple Tech. So guys, the positive stuff is still happening for Ripple and XRP. I still stand by my statement. Hold your XRP coins. They are going to be worth a fortune one day. But guys, this whole thing about Wall Street getting into crypto, I don't think it's good. I think it's actually a good thing that Goldman Sachs is putting the brakes on the crypto desk. I know in the short term this looks brutal, but you know what? If Wall Street doesn't get into crypto, I think that's a blessing in disguise. Anyways, guys, what do you guys think? Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.